Talent doesn't wake up one morning and decide to betray its homeland. It does a spreadsheet, cold numbers, expected returns, risk premiums, liquidity, exit options. And that spreadsheet is exactly why talent leaves Malaysia and stays in Singapore. This is not about culture, food, or patriotism. This is about capital gravity. Malaysia loses talent because capital does not stay put. Singapore keeps talent because capital never leaves. Let's be blunt. Talent is just high-end labour with optionality. They don't ask, is this country nice? They ask, can I compound wealth here? Can I protect assets here? Can I exit cleanly if things go wrong? Singapore answers all three in bold font. Malaysia answers them with footnotes and asterisks. In Singapore, salaries are seed capital. Equity compensation means something. Capital gains aren't treated like moral crimes. The financial system assumes you want to grow, not apologize for it. In Malaysia, income is where ambition goes to die. You earn, you consume, you stall. Asset growth is slow and exposed to political noise. Currency depreciation quietly eats your returns. You think you're saving, you're actually leaking value. Now let's talk real estate, because this is where talent makes its long-term bet. Singapore property is expensive on purpose. It functions as a capital filter. Prices reflect global demand, not domestic sentiment. When you buy, you're parking money in an international balance sheet. Malaysia's property market pretends to be affordable while quietly trapping capital. Oversupply, weak secondary markets, poor rental yields. Talent does the math. You can buy cheap, but you can't sell smart. Financial professionals understand this instantly. Stock market depth, regulatory predictability. Singapore runs like a fund manager obsessed with downside risk. Malaysia runs like a committee arguing about optics. This is why hedge funds, family offices, and regional HQs cluster in one place and not the other. Talent follows deal flow, not speeches. And here's the part nobody likes to say out loud. Talent doesn't trust systems that moralize money. Singapore treats capital as neutral and mobile. Malaysia treats it as political and suspicious. Guess which one talent believes will still work in 10 years? This chapter is not an opinion. It's a diagnosis. Talent leaves Malaysia the moment it realizes income alone won't build a future. Talent stays in Singapore because the system is engineered for asset accumulation, not just survival. People say Malaysia is comfortable, cheap food, cheap rent, but cheap is doing damage. Talent runs because the currency is lying to them. In Malaysia, income is in a currency that structurally depreciates. You feel richer locally while becoming poorer internationally. That is illusion. Compare that to Singapore. The Singapore dollar is managed for stability. When talent earns in SGD, they are not just paid, they are protected. This difference explains the brain drain. Low cost of living only matters if your assets appreciate faster than currency loss. Otherwise, you are just consuming time cheaply. Malaysia offers affordability without acceleration. Singapore offers pressure with payoff. Currency decides your future before talent ever does. Malaysia asks talent to trust hope. Singapore offers math. People frame real estate as lifestyle. Big mistake. For talent, property is not comfort. It's about balance sheets, leverage, and exit timing. This explains why high-value talent builds roots in Singapore and keeps one foot out of Malaysia. Let's be cruelly honest. Malaysia sells the fantasy of ownership. Singapore sells the reality of capital deployment. In Malaysia, cheap property is the bait. You buy, then realize the trap. Oversupply, weak rental yields, and a resale market where long-term holding is code for no exit. Talent understands, if you cannot exit, you do not own an asset. The asset owns you. Singapore's system looks hostile, high prices, heavy regulation. That's intentional. It's not designed to be affordable, it's designed to be selective. High prices create discipline. Discipline creates stability. Stability attracts global capital. When talent buys in Singapore, they're not buying a home. They're buying into a global collateral system. Property becomes a financial tool you can actually use. In Malaysia, it's often dead capital, frozen in concrete. You don't anchor your future where assets stagnate. You anchor it where property functions like a financial instrument, not a sentimental liability. Talent doesn't just ask where money exists, it asks where money moves. This is where Singapore quietly destroys Malaysia without raising its voice. Singapore is not rich because it has more money. It's rich because money circulates faster, cleaner, and with less friction. That is the entire secret. In Singapore, regulations are not vague suggestions dressed up as policy. They are executable code, clear rules, stable interpretations, predictable enforcement. Financial institutions know exactly where the lines are, which means they know exactly how far they can go without triggering chaos. This creates velocity. Capital enters, restructures, leverages, spins off, exits, and re-enters. Private equity deals close fast. Family offices set up without begging. Fintech licenses don't feel like roulette. Regional treasury centres operate with confidence that tomorrow won't invalidate today's compliance. Malaysia, by contrast, has rules that exist until they don't. Regulatory interpretation changes with mood, politics, or public sentiment. Approvals slow, exceptions multiply. Informal friction becomes part of the cost structure. Capital hesitates. And hesitation is fatal. Here's the brutal truth. Capital hates uncertainty more than it hates taxes. Singapore understands this. Malaysia still thinks incentives are enough. So what happens? Banks cluster where risk is legible. Funds domicile where exit rules are boring. CFOs place treasury operations where currency controls won't suddenly become temporary measures. Startups incorporate where future fundraising won't trigger regulatory migraines. This is why regional headquarters stay in Singapore even when operating costs are higher. Overhead is predictable, risk is priced, compliance is a known expense, not a random event. Malaysia keeps asking, why don't they trust us? Because trust is not requested, it is engineered. Money velocity also explains why Singapore salaries convert into wealth and Malaysian salaries convert into consumption. In Singapore, income flows naturally into investment products, REITs, structured notes, equities, offshore allocations. The system assumes you will invest and quietly helps you do it. In Malaysia, money hits speed bumps everywhere. Limited instruments, conservative banking culture, shallow capital markets, capital preservation beats capital growth. Over time, talent realizes they are not building portfolios, they are just paying bills more comfortably. Finance professionals notice this early, engineers notice it later, families notice it when school fees, healthcare and retirement planning collide with reality. Singapore does not try to emotionally retain talent, it simply makes leaving irrational. Malaysia tries to convince talent to stay. Singapore designs a system where staying is the obvious move. That's why money breathes in one place and holds its breath in the other. Here's the uncomfortable ending nobody likes to admit. Malaysia doesn't just lose talent, it permanently exports it. Once professionals plug into the financial, legal, and capital systems of Singapore, returning to Malaysia feels like stepping backward in time, not geography. This is not arrogance, it's systems shock. After Singapore, talent recalibrates its baseline. Clean currency, deep capital markets, functional real estate as collateral, fast deal cycles, global financial connectivity, predictable regulation, international schooling, medical infrastructure that doesn't require backup plans. Going back means re-accepting friction everywhere. Lower nominal costs, yes. Lower financial ceiling, absolutely. At that point, Malaysia stops competing with Singapore and starts competing with nostalgia. Family ties, food, childhood memories, none of those compound. And here's the final nail. Singapore turns residents into investors by default. CPF, equity exposure, REIT access, global asset channels. Over time, talent's identity shifts. They stop thinking like wage earners and start thinking like portfolio managers. Their wealth becomes multi-jurisdictional. Their assets are no longer anchored to one country's politics or currency. Returning to Malaysia would mean reconcentrating risk. Why would anyone do that voluntarily? This is why returnee programs fail. This is why tax incentives don't work. This is why patriotic messaging falls flat. You cannot bribe someone to downgrade their balance sheet. Malaysia still believes talent can be persuaded. Singapore understands talent must be locked in, structurally. And once locked in, the door is effectively one way. This is not a moral judgment, it's an engineering outcome. Countries that design systems for asset growth keep talent. Countries that design systems for income survival lose it. That's the real reason talent leaves Malaysia but stays in Singapore. Not culture, not language, not vibes, capital architecture.